Welcome to Sprott Media. I'm Albert Liu. I'm joined now by Nick Giambruno. He is the chief analyst of the Casey Research flagship advisory, the Casey Report, and also its premium value investing advisory, Crisis Investing. Nick's joining me today from Colombia. Nick, thanks for joining me at Sprott Media. How are you?
Great to be with you, Albert.
Really enjoyed your recent article, which is why I invited you to come on the show. The title is Why an Epic Bull Market in Gold is About to Begin. This is through Casey Research. You list 8 reasons there, so I thought maybe we'd go through each of these one by one, but please first give the viewers an outline of what this article is and why you wrote it now.
Oh, okay, sure, Albert. One thing that I've been noticing over the past year or so while following the gold market is that there are a number of very compelling catalysts for the gold market that are happening. And one thing I hadn't seen elsewhere is somebody these are 8 catalysts, as you will see, that many of your readers and listeners may have heard of before. But when you take a step back and you look at all of them together, it paints a very compelling picture. So what I did is I took a step back and looked at the bigger picture, and I think it paints a very compelling picture for gold.
Okay, one of the reasons is the price is low and has been low by historical standpoints for a long time. I wonder, is this one of your reasons, or do you have 8 completely different reasons?
Actually, that's not one of the reasons. I have 8 completely different reasons. And really, when you look at it, these 8 reasons paint a picture of the remonetization of gold, gold coming back as a premier form of money. And that is the big trend here. And that is, I think, the clear picture you see when you take a step back and analyze everything that's going on here.
Okay, so let's start with from the bottom, number 8.
Okay, so that would be the Basel III rules. Now, these are rules that are put out that banks all around the world have to follow by the Bank of International Settlements in Switzerland. It's really, it's often referred to as the central bank of central banks because it does all sorts of transactions, mostly gold transactions for central banks around the world, the largest central banks around the world. And they come out periodically with different banking regulations. And one of the called Basel Accords. And the latest one that came live earlier this year had to deal with a bunch of issues, but buried in the jargon and the sort of boring text was something that was very relevant to gold. And what they highlighted is that in certain circumstances, gold can be used on a bank's balance sheet with a 0% risk weighting. And what that means in plain English is that they've officially upgraded the role of gold in the monetary system for the first time in decades. And this is a big deal because these central bankers all around the world, they like to pretend that gold isn't important. I mean, you may remember the famous instance when Ron Paul asked Ben Bernanke, why do central banks hold gold if they view it as not money and not important? And Bernanke said in a very unconvincing way, well, it's just tradition. Well, obviously that's not the case. So what this represents, even though it's a relatively minor change in the rules and how banks can deal with gold, is a change in attitude and a change in policy from this. So no longer can central banks and their various acolytes in academia and media pretend that gold isn't important, because now they've just upgraded gold's official role. So that would be one of the 8 reasons.
And this is interesting, Nick, because you and I would probably agree that gold should be one of the only things that would deserve a 0 risk weighting on a bank's balance sheet. Now here they are finally upgrading it. The next, number 2 is, depending on what order we're going in, is related to that, right? And that has to do with central banks and their purchases.
Yes, it is. So if you look at, it's important to look at what central banks are doing, not what they're saying. So one of the things they're doing is buying record amounts of gold. And again, if you take a step back and look at this trend, central banks, which are the biggest players by far in the gold market, flipped from being net sellers of gold to net buyers of gold back in 2010. And that trend has just accelerated up until last year, where 2018, central banks bought more gold than they have since the 1970s. And they're on track for this year to buy even more. So this is a huge trend in the gold market, and another huge catalyst for gold.
All right, next up has to do with oil and China.
Yes, well, it's no secret that there's tensions between China and the U.S., and also North Korea is involved here too. But back about 2 years ago, when the North Korean tensions were really spiking, the Trump administration bluntly threatened to kick China out of the U.S. dollar system. This is a very potent threat. And it goes back also to the previous reason why a lot of countries are buying gold. I forgot to mention that the biggest buyer among countries is Russia. And Russia is buying a lot of gold precisely for the same reason that I'm talking about here, with the U.S. threatening to kick China out of the dollar-based system. They want to have a backup. They're hedging their bets. So when the U.S. made that threat to China, it helped push China to look for alternatives, because without access to the dollar, how is China going to pay for its imports? How is it going to engage in international trade? It can't, and its economy would come grinding to a halt. So obviously the Chinese would not want to depend on any country like this. And I think this is one of the main reasons they developed an alternative mechanism for trading oil. And oil, you'll note, is by far the most valuable in terms of market size commodity that's traded. I think it's about $1.7 trillion a year of oil is traded around the world. China needs to buy a lot of oil. They're the #1 importer of oil in the world. And prior to the introduction of this new mechanism, China had to import all of its oil with US dollars, which means they basically need to be on the good graces of Washington to be able to import oil, which is very crucial, obviously, to their economy. Nonetheless, the Chinese have, for many years, been trying to develop a system, a mechanism that would allow them to buy oil on a large-scale basis without having to resort to the dollar. And this, actually, they were able to pull this off. And this system went live last year. And what it is basically an oil futures contract that trades in Shanghai, denominated in Chinese renminbi. So China, being the largest importer of oil, has bargaining power when it comes to buying oil from various countries around the world. So it can compel other countries to accept Chinese renminbi for their oil exports. But the Chinese know that a lot of countries don't want to hang on to Chinese renminbi, so they've made it very easy for oil producers who sell oil to China. It doesn't have to be to China, by the way. It could be anybody could utilize this new oil futures contract denominated in renminbi. Anybody can use this, but China knows that people and countries don't want a giant stack of renminbi, at least not now. So they've made it very easy to take that renminbi that come from the oil sales and then go to Hong Kong or Shanghai and exchange it for physical gold. Shanghai is already the world's largest physical gold market. So effectively what you have here is a mechanism to transact for oil in gold. And not only that, but that allows producers and consumers of oil to completely bypass any sort of restrictions, regulations, and sanctions that come with the U.S. financial system. This is obviously very attractive to countries that are on the U.S. naughty list. There's plenty of them. So what this means, and the bottom line is that a lot of oil money is going to be flowing into gold instead of U.S. dollars and treasuries as this new crude oil futures contract takes off. And it is taking off. The volume is increasing, and that is another major catalyst for gold. And as I mentioned, it was launched last year, but it has been slowly growing. And this is a totally unprecedented thing. This is the first time since basically World War II that there is a way for countries to do large-scale transactions of oil outside of the US dollar system. And in this case, it's basically going into gold. So it's a very, very, very big catalyst for the gold market.
And Nick, you think that if you're the State Department or the Federal Reserve, you really have to be concerned about this and careful what you wish for. If you cut people off of the dollar system, they are going to find alternatives. And it must be a concern seeing a commodity as important and as widely traded as oil being transacted in gold. And in the article at KC Research, you put a chart that illustrates the relative size of these markets. And the oil market is huge, 10 times larger than the gold market, or over 10 times larger than the gold market. So this has got to be a concern.
Oh, it's huge. And it should be a concern for people who haven't invested in gold, because they might miss out on this. Because yes, as you correctly noted, the oil market is 10 times larger than the gold market. So if just a fraction of all that oil money is redirected into the gold market, that could easily overwhelm it.
Okay, so the next one, the Fed's dramatic capitulation.
Sure, this is another important catalyst for gold. We were told in the wake of the 2008 financial crisis that all of these so-called emergency measures would be temporary, and that Congress and the Fed would dial them back once the emergency subsided. And this included all sorts of programs. We all know about quantitative easing. I don't like to use the term quantitative easing, incidentally. It's just a euphemism, and euphemisms are a way to cloud language and cloud thinking. So quantitative easing is just a way to describe money printing. So don't use that term. But anyways, the Fed created $3.7 trillion out of thin air in the wake of the last financial crisis. It bloated the Fed's balance sheet. They bought government bonds. Which manipulated the interest rates low, helped pump up the stock market into bubble territory and so forth. But the only reason that they were able to use this unorthodox policy is because they promised the American people that this was an temporary emergency measure, and that when times went back to normal, it would be reversed. So what the Fed did starting 2016, they tried to quote unquote normalize their monetary policy, raising interest rates, shrinking the balance sheet, and so forth. And they got up to about, I think, 2.5% on interest rates from zero, which is still far below historical levels. And they drained about $500 billion off of their balance sheet, or about 11% from its peak. But then the stock market tanked, as you recall last year. Between September of 2018 and the end of the year, it almost crashed about nearly 20%. And it looked like it was headed sharply lower. But that is when the Fed did a complete abrupt face on its tightening policy and switched from a tightening to a more neutral and now a loose policy. They're hinting at a loose policy. So it's a complete 180 on the Fed. And of course, that is going to be good for gold, because rising rates isn't necessarily good for gold, but more money printing and more stimulus is certainly good for gold. So basically what they did is they took a headwind and they flipped it into a tailwind. And this is another important catalyst for the gold market.
Indeed. The next one you have is related to the takeovers we've seen in the gold mining industry. How's that good for gold?
It is because, well, first, you can see that 2019 is on track to be a record-breaking year for gold mergers and acquisitions. I mean, the big players in the gold mining industry, they're pouring billions of dollars into it, and it's on track to be a record-breaking year. We've seen all sorts of deals just so far this year and late last year. But what these huge deals prove is that these biggest players in the space think that it's a good time to buy. And, instead of looking to develop new resources, they'd rather buy other companies that appear to them to be cheap. So I think this is another major tailwind for gold.
Okay, I like this next one. President Trump is pro gold. You know that he's definitely pro low interest rates, and I guess if you're going to be smart about it, you're going to be pro low interest rates. You probably would load up on gold as well, right?
Well, sure, Albert. It actually goes much deeper than that. President Trump is a huge fan of gold, and he's made a ton of money as a gold investor. He's called investing in gold easier than the construction business. Trump was one of the first people to invest in gold back in the 1970s when it was became legal again for individuals to invest and own gold. As you might know, between the 1930s and the 1970s, it was actually illegal for American citizens to own gold. But once that restriction was lifted, Trump bought a lot of gold, and he made a lot of money in gold. You can look up exactly what he said back then, but he's a huge fan of it. And he said shows that things about gold, that he has a very deep understanding of it. He once said that, let me read this here, the legacy of gold as a precious commodity has transcended to become a viable currency and an accepted universal monetary standard. Central banks around the world are holding gold as a reserve asset. Now, he said this. It obviously shows he has some knowledge about gold. But also, he was asked when he was a candidate about going back to the gold standard, and he said, quote, bringing back the gold standard would be very hard to do, but boy, would it be wonderful. We'd have a standard on which to base our money. So he obviously has a strong preference for gold, but he is actually acting on these gold instincts. He's not just saying nice words. Trump has been able to actually influence more control over the Federal Reserve than any president since the Fed was created in 1913. He's had a chance to fill I think about 5 out of the 7 seats on the Board of Governors of the Federal Reserve, and he's looking to put more pro-gold people on the Fed, including Herman Cain and Stephen Moore. Both are strongly supportive of a gold standard. Now, those two have both since withdrawn their nomination, but one of other suspected replacements has been Judy Shelton, who is also an advocate of the gold standards. But it shows, what this shows is that Trump is not just talking about gold, he's actually acting on his pro-gold instincts. And the bottom line is this: having a president who favors gold and is looking to stack the Fed with pro-gold people is totally unprecedented in recent history. And it's a positive sign for gold and a positive sign for the trend that I've been talking about, which is gold's remonetization. So it's yet another big catalyst for the gold market, I think.
I have to push back on this one a little bit, Nick. I'm wondering, is he a fan of gold like you and I are fans of gold, or is he more a fan like Alan Greenspan is a fan? And are those words that he uttered or wrote, whether it was an interview or an article, going to be as infamous as the ones Greenspan published at one point when he was working so closely with Ayn Rand?
Well, I guess time will tell, Albert. And another thing another little clue we can see is that one of the things Trump did when he became president is he put Andrew Jackson's portrait up in the Oval Office. And you might recall that Andrew Jackson was the U.S. president that shut down the second central bank of the U.S., which was the previous incarnation of the Federal Reserve. Most people don't know the Federal Reserve is actually the third central bank in the United States. And Andrew Jackson shut down the second one. What is that? Does that mean Trump is going to act on that? I don't know. We shall see whether he'll turn out to be another charlatan like Alan Greenspan, or he's actually going to do something about it. And he could have a chance to do something about it, because if there is a serious economic crisis, he is going to have some tough decisions to make. And he could choose to go to gold. He might not. He might go the other way. So I guess time will tell, but at least he is aware of the issue, where I don't think previous presidents had any clue about gold or its monetary history or use.
Very good, Nick. Next up, socialism is on the rise.
Okay, well, I think gold is going to benefit no matter which party is in office. I just talked about Trump and the Republicans, but with the Democrats going more and more socialist, I think this is going to be beneficial for gold too. And it's very simple because, well, let's look at this. In the U.S., it's all about demographics. I mean, the millennials are now the largest demographic group in the U.S., and by sometime this year or shortly thereafter, they're going to surpass baby boomers as the largest adult generation, living adult generation. And millennials are very much in favor of socialism and sometimes outright communism. I think it's about 1 in 2 millennials favor socialism or communism over capitalism. So this is translating into the growth of socialist candidates and politicians in the U.S. You see Bernie Sanders, AOC, and so forth. They're all skyrocketing in popularity. And it's not a small problem because, like I said, the demographics basically guarantee socialists coming to power in the U.S. in the not so distant future. So what does that mean? Of course, they have all these extravagant programs that they'd like to institute, and they, whenever you ask them, how are you going to pay for this? They say, well, we'll tax the rich. But when you do simple arithmetic that show even if you took every penny from the rich, it's not even going to put a dent in some of these programs that they'd like to institute. So then they say, what are you going to do then? And then they say, well, don't worry, we'll just print money. So this is, where of course, this modern monetary theory comes in. It's, the latest buzzword coming out of Washington. Basically just means print money to cover the deficits. It's no different than the kind of economic policy and quackery that's brought misery to Argentina, Venezuela, Zimbabwe, and so many other places. But now it's going to come to the U.S. And this is going to be very bad for the dollar. But as the socialists debase the dollar, it's going to be good for gold because gold kind of competes with the dollar as monetary, vehicle. So as the American socialists inflate the dollar away, it will make gold all that more attractive. And this is also another, of course, very positive catalyst for gold and the remonetization of gold.
Yeah, and Nick, I like the picture you've drawn here because on the one hand, you have what you hope will be discipline. I don't know if I agree with that, but with the Republicans, you have discipline on one side, which is good for gold. Then you have inflation and chaos on the other side, which is also good for gold. So I like the picture you're drawing here in terms of the case for gold. Number 8, the last one, gold-backed cryptos, something we know a little bit about here. What's your take on that?
Yes. Well, I can't think of two assets that have so much synergies. And in other words, the whole of gold and cryptos is worth much more than the sum of their parts. And they have a ton of synergies. And what do I mean by that is that when you combine the two, it makes a powerful new monetary vehicle. Basically, what this allows for the first time is for somebody to be able to instantly, to anybody else in the world, send small or large amounts of gold reliably without interference. It allows the average person to have access to gold as easy as using a cell phone app. And really, this is a huge revolution in the monetary system. And we're at the very, very beginning of it. So kind of taking a step back, the cryptos take cryptography, which is a very old technology, actually. It's just a way of encoding information. But it's been only since about the mid-1990s that really strong, military-grade encryption has been available to the average person. Previously, this was a monopoly. The governments around the world had a monopoly on this technology. Now, the average person can use the same kind of encryption that the U.S. government itself uses to secure its data. And this has many implications beyond just securing emails or messages. It's the basis for cryptocurrencies. It's how this distributed database, which is what a cryptocurrency basically is secured and prevented. It makes it tamper-proof, that being that it's secured by this cryptography and it's distributed. So when you take that sort of setup, the blockchain, and combine it with something that is redeemable in gold, you have a very powerful monetary vehicle that was not around a couple of years ago. And this is, I think, going to be a very big thing for gold because it's going to give the average person, anybody with a cell phone, can now transact in gold in a way that was not possible just a few years ago.
Nick, you said that very well because if you think about meaning the sum is greater than the whole is greater than the sum of the parts, what gold lacks in let's call the utility of convenience in terms of micro divisibility, electronic transfer, all the utility you get from conveyance through apps, cryptos have mastered. And then what cryptos lack in sort of what some people call intrinsic value or I guess credibility, some of them because they're new, not necessarily because they lack credibility, but because they're new, gold brings to the table. So I tend to agree with you. The union of the two is something that's very powerful, and both camps have the same wariness of governments and their currency, so they're completely compatible in that way, philosophically as well.
Oh, absolutely. I think they're not competitors. A lot of people have this us versus them mindset when it comes to gold and cryptos. I think they're complementary. They enhance each other, and they make a better product out of both things.
Wonderful article, I thought. Encourage everyone to go to Casey Research and read this article. But Nick, before I let you go, I want to alert the viewers that you're going to be a featured speaker this summer in Vancouver at our Sprott Symposium, July 30th. I'm really looking forward to seeing you there. I can't remember the last time we met in person, Nick. It must have been in Argentina or another conference, but it's going to be really good to see you again in Vancouver. Can you tell the viewers maybe what topics you might be touching on while you're there?
Oh, absolutely. And I look forward to catching up as well, Albert. It's going to be a great time. So I am going to be talking about gold-backed cryptos in great detail. So if your viewers are interested in that, they'll be interested in checking out my talk in Vancouver later in late July and early August, I think. So I am very much looking forward to attending that and catching up with you and everybody there.
And I want to let all the Doug Casey fans know that, of course, Doug is going to be there. If you sign up for the conference now at sprottconference.com, you can use the discount code Collusion, and you can have Doug's latest book at no charge. And Doug, I'm sure, will be happy to autograph it there for you. So please check that out, sprottconference.com. Check out Nick at caseyresearch.com. Nick, thanks for joining me again today.
Thank you, Albert.